Okay, today's day 3, and today we're going to be learning about break of structure, right? So, a break of structure is to identify when the market is shifting trend. Break of structure can happen on any time frame. All these confluences that I'm teaching you can happen on any time frame at all, at any time frame. 30-second, 1 minute, 5 minute, 15, 3 minute, 1 hour, 4 hour, daily, weekly, monthly, yearly, all the time. A break of structure happens on every time frame. All these confluences happen on every time frame. Let me show you a trend. Let me show you an example of a bullish break of structure. So right now we're in a downtrend. Up, down, up, down, up, down, and then we come above this high that was recently made, and then we start going into a bullish trend, taking out all these other sides of liquidity. See, now we're mixing two confluences, liquidity sweeps, and liquidity sweeps and a break of structure. So in this example, bullish trend, right here, the most recent high, we broke structure to the upside, above the wick. The body of the candle needs to be above the wick. So this is a bullish break of structure. Let's do a bearish break of structure. So the trend is now bullish, coming up, down, up, down. I don't like that one. Down, up, down, up, down. Then it just continues down. Okay, so in this example, price is bullish at the very moment. And then we have this candle right here that closes below the most recent candle low. So this now will be a bearish example of a break of structure. Let's go to the chart and look at where we can find one. Okay. Right here. Market just made a swift move down, and we're now trading to a new high, right? This is indicating that if we break above this high, fuck off. If we break above this high, we will continue a bullish trend. So what we do, market came down, tested all this untested area of orders, broke above this high, came higher, swept liquidity. Okay, this example right here, price is confirmed right here, bullish, sweeps liquidity, causes more liquidity, eventually comes down, breaks structure right here, most recent low, and then we follow orders to the downside and eventually just fucking tank, sweeping all these other liquidities from other sessions. Okay, breaker structure is going to be so easy to find on like market trends and anything like that. So right here we have a crazy example where this would now be a high. Market is not breaking this high, market is not breaking this high, still showing bearish confirmation. Boom. Where would the next breaker structure be? Right here, the newest high made. Market is still identifying that we're inside a bearish zone, a bearish order flow. This would now be the high. Once price broke above this, came up, swept all this previous session liquidity. Look, we had a breaker structure back to the downside, but it faked us. On another indice, probably ES, it probably closed differently. When you just know market structure, you're going to see how oh, that's a breaker structure, that's not a breaker structure. This is a tricky example. Even in these market conditions, when a previous session is moving like choppy like this, you don't even trade. Point blank, period. But this will be right here. Boom, a bullish breaker structure. Let's look for a bearish trend. Right here, most recent low, these two candles, broke structure to the downside and just flooded the face, filling in all this liquidity to bring price back up to the upside. Let's see our most recent one right here. Boom. High, low, most recent high, come down, boom, broke structure and just flooded to the upside, filling in all. This is yesterday's. This is day 2 price action. So broke structure to the upside and just bull ran the entire session. So that is Break of Structure. Break of Structure is very easy and very understanding and like should know on the back of your hand. That's a Break of Structure done. So another thing I want to talk about is psychology. So psychology is 80% of trading, 50% of knowing Confluence is what I'm already teaching you, bias, which I'll teach you, and fuck off. What? Confluence, bias, and order flow, which I'll teach you. 5% pressing buy and sell. That buy and sell be fucking people up, bro. It be thinking that they have to take a trade a day or they have to do something. No, bro, just take it easy. This is not a get rich quick scheme. If you can really sit down and get your patience and get your psychology on point, you will be 110% in the market making money. And if you're in, like, so I'm gonna be completely honest. If you're in here to make money, everyone's in here to make money. But if you can do it without making money for a whole year, you will be profitable. And so guess what? It doesn't even take a year to be profitable. There might be that one of 1,000 people, 1 in 1,000 starting that day that becomes profitable in 6 months. And that happens once per 1,000 people a day, which is not a lot. That's only 365 people a year that become profitable in 6 months. Normally takes two years, a year and a half, mostly, to become really profitable, start getting payouts. And I think what profitability is payouts over time in a consecutive manner. So not saying, oh, in January you get a payout for 8,000, February you get a payout for like 2,000, and then the next month, February, January, March, April, May, you don't get no payout, and then you get a small payout the next month after those. That is not profitability. Profitability is consecutive wins over time generating an income. That is profitability. If you can just get your psychology right, your confluence right, your bias right, and your patience correct, all it is time. All you need is all those 5 things to become profitable and market experience, but that just comes in with time. I'm telling you, these videos, the Discord, the group I'm trying to build, even from TikTok, I'm trying to just show everyone that's mainly possible to become profitable. That's mainly possible to become profitable in these types of markets or any type of market, futures market, or even if you're trading forex. But we're gonna have another video about psychology and like just putting everything together. Put everything together. I will show you live trades I do with the Discord. I'll show you live trades. I have a whole probably month long, even a little bit longer than that. Just dropping sauce, dropping free game. But that being said, day 4 tomorrow will be on fair value gaps. And I'll probably do another session of psychology and like understanding the market direction. But we learned about liquidity sweeps, which you use, and break of structure. And now you gotta find out about psychology. Psychology comes within also. Psychology is telling yourself that you can do this and that you're profitable. You can do this no matter what. It's 1%. 99% of people fail. 1% gets away. 1% runs with the money. 1% doesn't need a Goldman Sachs card. Say I'm trading with $1 million. They have money to the side, and they have funded accounts ready to be processed for payouts. With that being said, day 4 is tomorrow. We're gonna keep on the roll, keep doing this, and keep engaging with y'all.